Hey everybody, it's Wayne. Thanks so much for tuning in for another portfolio update. Some news to discuss. I've decided going forward, as you guys know, on a weekly basis, I traditionally push out two videos. The first video being these weekly portfolio updates where I cover everything from dividends, what I've purchased, and the overall performance of my portfolios. I was also squeezing in information on my premium that I earn from the options, and it doesn't really make sense for the options information to be a part of these videos, seeing how I also release weekly videos regarding my wheel update. So going forward, I'm going to talk about options exclusively in one video, and then this video I'm going to only talk about dividends, portfolio performance, what I'm purchasing, and maybe some other things, but I don't want to squeeze in too much. So I hope you guys are good with that. And with that, let's go ahead and kick things off with dividends. We haven't talked about dividends too much, and we're going to go ahead and sort this on last week, which was the 15th, and I'm going to go ahead and narrow this down to dividends received. And actually last week, things looked pretty good. You guys can see here, kicking things off on the 15th, I received $7.18 from AbbVie. CEQP, I received 47 cents. Main Street Capital, which I also own in Robinhood as well, $23.28. The only reason I own it in both brokerages is because up until recently, I was selling covered calls on Main. I've been making a great deal of money selling covered calls on Main, so I might keep the 100 shares in each brokerage since both strategies are working out rather well for me. Procter & Gamble, I was able to earn $5.30. Oh, Realty Income, one of our favorite monthly payers, $52.13. I think I own 103 shares. Stag, another monthly payer, $51.88. CEQP, I would call this the big brother of this earlier cash dividend here, and this is going to be for $96.94. So by far the biggest dividend that I received in M1 this past week. Horizon Technology paid me out $73.37 plus this 6 cents. So all in all, in M1 this past week, I earned $310.61. Let's go ahead and change this date range to reflect everything that I earned in the month of May. And you can see here, not too many more stocks, but things kicked off rather great on May 4th. And you guys can see some monthly pairs. So the reason I want to bring this up is I have not yet filled out any dividend income for the month of May. And if we look at my spreadsheet right here, let's go ahead and focus on yearly dividends. You can see there is no information that I have input. So let's go ahead and fill out the information. And as it turns out, so far in the month of May, I have earned $438.68 for M1. Let's go ahead and give you now a peek of all the dividends that I've earned so far from Robinhood. All right, showing you the app view of Robinhood. Let's go ahead and start way back on May 1st. This is a slight recap because I did briefly talk about these a few weeks back, but you can see $61.09 from CVS. Main, as I mentioned, right? I received this both in Robinhood as well as M1, $22.50. Tesla, guys, is the new one that I wanted to talk about. There's been a lot of water cooler talk about this synthetic covered call ETF based exclusively on the Tesla stock. As it turns out, I bought this one, but I also own Tesla as well. There's also been some videos, some great videos out there. Some people calling it a dividend yield trap. Some people saying that this is definitely a solid addition to your portfolio. I'm right there in the middle. I normally don't blatantly chase yield, but one of the things that I've been experimenting with in my portfolios is, to be honest, not necessarily focusing in on, let's say, like long-term growth. You guys know what's in my long-term hold size of M1. So I am willing to experiment when it comes to new stocks on the block, so to speak. And that's going to be the case with Tesla as well as OARC. Both of these, I bought 100 shares. So take a look here at Tesla. They just paid me out 44 cents per share. I own 100 shares. Now I want to show you guys my current position because admittedly, for those of you that say, Wayne, this is a yield trap, I wouldn't argue with you, but I would also say that my cost basis is $14.94. So yes, I spent $1,400. I'm currently down about 5%, which is about $78. And in the last month, this thing has gone up, it's gone down. I'm okay with riding this out. I don't know that I'm going to load up on too many more stocks of Tesla. As you guys know, there are some other synthetic ETFs that are out there, not only for Tesla, they have one for Apple, which I actually bought 50 shares of. They have one on Nvidia. There's a few more that are forthcoming as well. So do your own diligence. I can tell you right now, I wouldn't disagree if somebody said, Wayne, that's a yield trap. And I wouldn't disagree with somebody if they said, Wayne, you know, what's wrong with a little higher yield to average out your overall portfolio? Again, I'm right there in the middle of both of those stronger opinions. But nonetheless, I earned $44.02. OARC, in which I also own 100 shares. I recently purchased this as well. You can see here, if we look at my cost basis, I think I'm actually doing pretty good on this one. I've got 100 shares. My cost basis is $15.68. So I'm up just shy of 2% or $30. This is my first dividend that I've received from both Tesla as well as OARC. And again, guys, you know I've got a rather ambitious goal. 15,000 in dividend income is what I'm hoping to hit for 2023. Stocks like Tesla, stocks like OARC are going to help me get there. It's not to say that I'm neglecting, right, more sustainable long-term growth stocks that you guys know that I'm also investing in. This just keeps things interesting. Apple, right, speaking of a strong long-term hold stock, Apple paid me out a whopping $48.19. I own 200 shares. And if you guys take a look here at my Apple position, I think I've got a pretty good cost basis. Average cost for those 200 shares is $135.99. I am currently up near 30% or 7,800. So Apple has just had an incredible run up these past 3 months. Apple is a stock that I absolutely love. And I'll tell you right now, guys, I've got great concerns about Apple because I have been selling covered calls against Apple, and I think it's one of those stocks moving forward. After my covered call contracts die out, I'm just going to move this position over to M1. You know, I learned the hard way with Coca-Cola last year. Never sell covered calls on a stock that you love, and Apple is a stock that I love. So I'm really excited about that dividend, nearly $50. As you guys know, I have a long-term plan to have all of my dividends pay for my utility bills, and one of my, I guess you wouldn't call it a utility bill, but it's a monthly bill. One of the bills that I have is Apple's music plan. I think I pay $16.99 per month. So I would love nothing more for my Apple position to pay an entirety year's worth of Apple Music subscription. So we're getting there slowly but surely. And you can see here for the last stock of May 15th, Costco paid me out $13.88. Take a look here. I am currently daily cost averaging, truly daily cost averaging every day, $20 Monday through Friday. So I have slowly built up my position to 13 shares. As you guys know, Costco is not going to be a barn burner when it comes to paying dividends, but their growth is fantastic. Take a look here. In the last 5 years, Costco has seen an increase of 148%. The last year, if we scroll to that, they're up 15%. And then for the last 3 months, they are down just slightly. So again, on a daily basis, I purchased $20. I would love nothing more to reach 100 shares of Costco. It kind of goes back to my earlier sentiment though with Apple. I love Costco so much, I wanted to get to 100 shares so I could also sell covered calls. Now that I've sort of, and if you guys remember, months ago, I sold out of my Costco position, I think about $17,000 worth, and I bought 100 shares of IWM. Since then, guys, I've really felt like I made a mistake by selling out of my Costco position. So even if I were to reach that coveted 100 share status of Costco, because I love the stock, right? And Costco is a stock that I love for the long-term growth. I don't know that I'm going to sell covered calls. So I may just push it over to my M1. But in the meantime, it's just sitting here in my Robinhood. So that's going to go ahead and round out all the dividends that I've received so far this week. And that's going to equal $226.19. Let's go ahead and fill in those spreadsheets. All right, so you'll see here that we have our May numbers entered in. Robinhood at $226.19, M1 $438.68. And as a reminder, we still have about 10 days left in the month, so I do expect this total to go up. maybe $50 to $100. But as it is right now, in May, I have received $664.87. So let's go ahead and take a look at the monthly dividend breakdown per year. And as you guys know, I just began my dividend journey in 2021. So I always go back to where things began. And if we were to add up, right, January up until May of 2021, at this time, I was only at $19.73. If we take those first 5 months of 2022, I was at $2,280. So for me to be at $4,600, I think, guys, I really do think that my goal of reaching $15,000 in dividend income by the end of the year, I think it's obtainable. And that's going to be a mixture of, stocks like Apple and stocks like Costco, but also going to be some of those higher yielders that you guys saw, such as Tesla and OARC, and some of those covered call ETF funds that I also have as well. So monthly dividends are looking really good. I still think June is likely to be the best month, even surpassing March's total of $1,900 plus. So you guys will have to remain tuned in to see if June is going to surpass March. But first things first, we got to knock out May, so stay tuned on that one as well. All right, let's go ahead and talk about performance. We'll go ahead and start things off with M1. As you guys know, I've got two brokerages. I really would categorize M1 as a set it and forget it. On a daily basis, I have $100 deposited from my checking account. And every day, 5 days a week, I make $100 worth of purchases. As you guys know, I've got four main slices that are categorized as quarterly dividends, long-term hold, monthly dividends, and ETF. The highest weighted or highest target percentage currently is long-term hold. And because it's so underweight compared to the other three, this is receiving 100% of that $100 every day, Monday through Friday, for a total weekly of $500. As a quick recap, in my long-term hold slice, I've got stocks to include Coca-Cola, Pepsi, AVGO, Lowe's, McDonald's, AbbVie, ExxonMobil, Procter & Gamble, J&J, Southern Company, Visa, Texas Roadhouse, Union Pacific, and Waste Management. Now, Waste Management is the newest addition to that slice, so I've got a total of 15 stocks. And in reality, if we take a look here at the top three, which is Coke, and Pepsi, these haven't really been receiving anything in the form of money or daily buys because everything from AVGO and below is so underweight. So take a look here, AVGO, it's only at 3.6 out of its targeted 7%. So all of that money that goes in, for the most part, it's going to these 12 stocks. But I will say, guys, and as you guys know, one of my mottos early on is small goals, big victories. And one of the things I've talked about is just consistency with investing. Some of these stocks, not some of them, every single stock here began right at $0. And as you guys know, every day I've been making my daily contributions. So to me, it's kind of an exciting deal to see how many of my stocks have crossed over the $1,000 threshold. Starting here at the very top with O Realty, right? One of my bigger holdings, I'm at 12,000 plus. And then we move down to Coke at 3,500, Pepsi 1,500. But take a look here. These are recent entries into that $1,000 club. AVGO, Lowe's, McDonald's, AbbVie, ExxonMobil, PG, Johnson & Johnson, Esso, Visa. And the last three that have not yet made it, which is Texas Roadhouse, Union Pacific, and Waste Management. Guys, they're not too far behind. I wouldn't be surprised if even in 2 to 3 weeks, Texas Roadhouse, UNP, and Waste Management also cross that $1,000 threshold. So I'm really excited about that. Remember, guys, small goals, big victories. Yes, I want to earn $15,000 per year in dividend income. And yes, I'm sure some of you have a long-term goal slice, even beyond 5 years or 10 years. Make sure along the way you're also setting more reasonable goals so you can celebrate those big victories along the way as well. So before we switch over to what things are looking at in Robinhood, let's go ahead and take a look at all of the holdings in M1. And you guys can see I've got a total of 46 positions. My cost basis, $129,000, which means I am down just under 3%. I don't want to make it sound like I don't care about this, but I don't. Because in reality, if this number is red, if it's green, it's fine, because I'm going to continue doing what I'm doing on a daily basis, which is making, right, $100 per day in purchases. And right now, for this year, nothing, is more important to me than making sure that that long-term hold slice gets built up. Will my strategy change for 2024? Yeah, perhaps. Maybe I'll go ahead and change the target percentages for these 4 slices. But right now, I am just so laser focused on those stocks in the long-term hold. So, I don't look at this number and be like, oh yeah, I've got 125,000 and last week it's up from 124 or it was down from 127. It's nice, obviously, to have this portfolio, but I really haven't been focusing too much on performance. That might sound crazy. I guess we can take a look here at the week. I think, if I'm not mistaken, finished in the green. Yeah, so I'm up just 1.17% or $1,400. But again, I would rather see that number be red, if I'm being honest, because that would allow me to buy, right, those quality stocks at a cheaper discounted rate. All right, and let's go ahead and finish things out with giving you a look at my Robinhood portfolio. I've been doing a lot of moving money around, and one of the reasons, and I hope that you guys are able to tune in, I just launched a new series titled Race to 100, in which my wife and I recently funded both of our Roth IRA accounts. And so right now, we were able to max out 2022 as well as 2023 for both of our accounts. And we're going to have a little bit of an experiment to see who can reach 100 shares of SCHD first. So do me a favor and tune into that video. I'd love to get your guys' feedback, and more importantly, I'd love for you guys to follow along on that journey. So you might see the cash value in my normal Robinhood brokerage. It's gone down some because obviously I had to fund both her account as well as my account. But right now, the brokerage is at $385,000 for the week. Things went pretty good. We saw, actually, not that crazy good, right? We're up about 1%. Maybe I'm thinking about the last month. Yeah, so the month we're up about 2%, but for the last week, we're still up about 1%, which is 3,800. If we look at all, though, that has seen a big jump up. In fact, I was down, I think, closer to like 6 or 7% the last time I did this update. So right now, all time, we're down, yes, 2.26%, or about $8,900. But that is a lot better than where we were at the beginning of the year. In fact, year to date should be a rather impressive number. My portfolio, and again, if you compare this to all of the major indices, I'm doing rather well. Year to date, I am up 18.45%. That's $60,000 that my account has seen grown year to date. As a friendly reminder, I think Robinhood Gold is a fantastic program if you are selling options, if you need margin available to you. And of course, one of the things that I love is their fantastic APY. It's a great way to park cash, not have it tied up, and you're going to be receiving monthly payments of 4.65 APY. So that's a yearly basis. I don't want you guys to think you're going to get 4.65% per month. You got to remember that 4.65 is on a yearly basis divided by 12 months. So you can see right now, lifetime interest, I have earned nearly $285. You can see here, I'm on deck to receive about $25. And right now it says that the cash earning interest is only $5,300. I say only because there is more money in the account than that. But remember, if money is tied up with options, like cash secured puts, you're not going to be able to earn interest. It truly has to be untouched or uninvested or unaccounted for cash. So let's go ahead and give you guys a quick rundown. You guys will see stocks and options, which is the majority of my portfolio, over 93%. I'm at $359,000. Cash has gone down significantly, I think, in the last month since you guys saw an update. I think at one point this was closer to like 70,000. But remember, guys, I use this account to pay bills, specifically taxes. I also use this to fund both my Roth IRA as well as my wife's Roth IRA. So just those two accounts, that was $25,000 just in the last few months getting both of those funded. Let's give you guys a quick look at the top 5 holdings and the top 5 losers. Microsoft, I am up, oh my goodness, nearly $14,000 on the 200 shares that I own. Apple, you guys saw earlier. Celsius, And you guys may recall that I have been featuring Celsius on my weekly wheel updates. Although 100 of my shares were called away, I actually owned 100 shares of Celsius even before I began featuring Celsius on my wheel series. And so right now, I have a fantastic cost basis of $76.40. And currently, Celsius is up to 131. So I've got a fantastic return on that. And Starbucks rounds out the top 5 as well. Again, not bad in the form of cost basis, $78.74. Starbucks has been seeing some ups and downs. I'd love for Starbucks though to fall below that $100 price range. I probably wouldn't nibble at any additional shares unless it went down to like 85, maybe 90. I don't know that it's going to go ahead and do that. Let's go ahead and give you my top 5 losers. No surprise, this is going to be the biggest loser for the remainder of the year. I just have a horrible cost basis. That's all it is, right? 300 shares that I own. My cost basis is $277 and the current share price is $180. The only saving grace when it comes to Tesla is the amount of money that I've been able to generate by selling covered calls, but even that has not worked out the way I planned. If you guys have been following my options videos in which I talk about what Tesla's done since the beginning of the year. Amazon, I have been able to make a fair amount of cash. So again, yeah, I'm down 7,000, but I've also made a pretty good chunk of change this year and last year selling covered calls against my 600 plus shares. Traeger. So I talked about this a couple of videos ago. Would I buy additional shares to average down? And I did. I think I bought 81 shares, which brought me from 300 plus to now 400. So it did bring my cost basis down from $15 to now $12.06. I think, and Traeger actually didn't do too bad on earnings, so they've seen a little pop in the share price. Nothing too crazy, but this has been as low as $2. So I'd be willing to buy another few hundred shares to get this average cost to below $10. But right now, by far, this is my biggest loser. The biggest problem that I have with Traeger is even though I own 400 shares, there's just nothing in the form of premium. So even if I were to try to eat at that deficit, it's not going to be by selling covered calls. There's just no premium when it comes to Traeger. CVS is also become one of my biggest losers, and I'm bummed about this because I think CVS is a fantastic company. You might disagree with me. I think they have a fantastic dividend, but right now they're going through a rough patch. I've got 100 shares in which my average cost is $96. I actually think this would be a good price to get in at, especially if you factor in the dividend and that you can make some decent money selling covered calls. But of course, do your own research. And then Target. Yeah, Target's also seen a decrease in the last month. But again, I'm not worried about any of these 5 with the exception of Traeger. Traeger is one that I just don't know what to do. So it sounds crazy, but I think for me to get out, it's going to be better for me to average down. So that's what I've been doing. Who knows? You guys might tune in next week and I'm closer to 1,000 shares. I just want that average cost to go down. So when Traeger does see an increase, maybe I can sell my shares sooner than later. And so there you guys have it, a quick look at both of my primary brokerages. I actually don't talk about the other accounts that I have. So between Robinhood and M1, I've got about 511,000 as far as portfolio value. But guys, truth be told, I have various accounts, some at previous employers. Some of my money I have tied in my kids' 529 college savings. As you guys know, I've gone back to work full time and they offer both a 457B as well as a 403B. So I'm also contributing to that. So right now, yes, 511,000 between Robinhood and M1, but I'm actually closer to about 800K if you factor in all of my accounts. And the only reason I bring this up is I think I'm going to make some moves and consolidate a couple of these accounts. For example, I have a couple of accounts in which I am no longer employed there, and the money's just sitting there, and I need to really make a decision as to whether or not that money should remain what's essentially a savings account, earning nothing in the form of interest or capital gains. So I think you guys are going to see me make some moves. and I'm going to withdraw some of these accounts. Now I'm able to do so because I have separated with those employers, and so that money, which is, I guess it was considered an alternative Social Security plan, so you can withdraw that money so long as you are separated from that employer, and that is the case with a few of these accounts. So I think I'm going to make some moves, and at the very least, maybe park about $15,000 in my Robinhood so I can at least earn that sweet APY. So I'll tell you, my favorite though is this sort of area down here. This is all of my passive income, right? This is just earning money while I sleep, and you guys can see to date, it's not just dividends, right? It's that interest that I'm earning from Robinhood. So I don't know, sometimes I get more excited about dividend income, passive income, than I do about some of these other accounts. But nonetheless, I'm so glad that you guys tuned in. Remember, we're not going to talk about anything related to options with the exception of the other video series titled Weekly Wheel Updates. So if you guys want to learn and hear more about option premium, make sure you guys are staying tuned in. Also, please guys go and check out Race to 100. I hope to push out my first update on that new series next week, and I'm telling you guys, it's going to be already a lot happened last week, more than I thought was going to happen. So do me a favor, check it out. Of course, if you guys are digging this content, make sure you guys are subscribed. Go ahead and smash that like button. And guess what? We'll see you guys on the next one.